Hello everyone, and welcome back to this edition of the weekly video markets update. I hope that you guys also staying safe amid of course, the new variant, and I hope that you also survived the recent sell-off that we saw in global markets across the board because of that variant that was, of course, picked up by the global media, and maybe it was kind of too much to be covered. But at the same time, it looks like this variant or the move that we saw because of this variant is overdone. But with that being said, let's kick off this video as always with the topics that we'll be covering today. Global markets recovering fast despite Omicron variant fears while we wait for the virus data update possibly next week. In the currency market, the US dollar index remained solid despite the recent jobs report amid the estimates for faster tapering and faster rate hike by the Federal Reserve. In metals, including gold and silver, stabilizing after the recent sell-off and showing early bullish signals. Is this the right time to start buying gold or silver? And finally, we take a look at the best signals that was issued earlier this week including the USDCAD and the Aussie dollar. We'll dive into the details after a short commercial break. Beginning with of course, the global markets, which recovered almost everything from the previous sell-off last week, which was also fueled by the new variant, or what is called the Omicron variant, and was picked up by the media in a way that it looked like as if the world is coming to an end, or as if we're starting all over, or as if it was March 2020. Surprisingly, the markets also were able to stabilize finally since the beginning of this week and started to recover, even though there is no solid data yet on how effective the current vaccines are. In addition, earlier today, South Africa announced that Pfizer vaccine provides partial shield in an early study, while we will have to wait for another week or two to see to see any kind of solid data, at least in the next few weeks. But it looks like also the market already made its mind and decided to recover until we see clear evidence that this variant will have a bigger impact on the market or even on the global economy. But until then, it looks like the descent rally may have begun already and might continue until the end of this year. And as you can see on the chart, and if you're not familiar with this is the VIX index, which basically lost over 70% of that spike that happened over last week. While the impact might be also a little bit different from a country to another, such as the UK, which also announced that, or what they call it, the Plan B, which includes working from home, extending the mask mandate, and enforcing the vaccine passport. While the Prime Minister Boris Johnson said that these measures will be reviewed in mid-January, if not before, which was taken by a wave of anger, of course, across the board, or at least across the United Kingdom, as this might actually mean that Christmas is cancelled for the second year in a row. But it will be very interesting to see how things will develop over the next few weeks, as many companies said, including Pfizer, that solid data will not be available until the end of this year. Anyway, let's move a little bit away from COVID and the variant, or all the pandemic that we've been talking about for over a year and a half now, or almost 2 years now. And let's have a look at the US dollar index, which traded within a tight range throughout throughout this week's trading, despite last week's jobs report, which came in also with mixed outcomes. Some of the data came in a little bit positive, some of the data or some of the elements were negative, including the disappointing data, which is the new jobs that came in much lower than expected, or at least 50% lower than what the market estimated. However, the index also managed to hold its grounds well above the 96 support area, as you can see on the chart, even though that we saw yesterday or on Wednesday, we saw some sort of like a decline all the way back to 96, which is around almost 0.4%. Yet the technical indicators are still suggesting further declines ahead, but at the same time, this is a part of a short-term retracement to the downside, and we've talked about this like over the past few weeks multiple times, that we believe that the dollar index will see some sort of a retracement to the downside before the upside trend resumes later. And if you're asking again the same question, why we think the dollar will remain the best currency ahead, please watch the previous video that I uploaded last week. It was not as long as this video or as long as the previous videos, but it is also very important to understand why we think the dollar is or will be or remains the best currency, and why we always talk about like we should be buying more dollars as long or on every single dip. But in short, as long as the market also believes that the Federal Reserve will end the QE faster and raise interest rates faster than the expected or the previously expected, the dollar is likely to remain the strongest currency unless there is any kind of a change by the major central banks around the world, which is, at least for the time being, is unlikely. But in the meantime, the downside retracement in the US dollar may also continue toward the 95.55, which is almost last week's lows, with the possibility to reach the 95 also, or the 95 mark, which would be the best levels, at least in my opinion, to start building a position ahead of the end of this year. From the US dollar, let's move to metals this time, and of course including gold and silver. But let's also start with gold, which managed to bounce again, or bounce off its daily trend line support on the daily chart. Maybe the chart is a little bit messed up, kind of, or like there's a lot of info on it, or there's a lot of line, obviously. But anyway, this comes after the sell-off that we saw over the past few weeks, and has led gold to also give up its notable gains and dropped back below its moving averages on the daily chart, including the 50, the 100, and the 200-day moving averages. At the same time, also, if you look at the chart, gold has tried to break above those moving averages one more time, but without any chance. At least that was on yesterday's trading session, and closed again the session below these levels. However, technical indicators are not that bad, at least yet. While the inflation pressure is here to stay, gold might actually still have like at least one more chance to recover over the next few weeks, as long as it keeps holding that trendline support. And we have already also sent out our signal on gold, which you can read about if you're actually a client for FBS through our written report explaining what are the risks and the possible scenarios or the possible reward for this trade. But for the time being, we need to keep watching the moving averages very carefully, and if gold will be able to break above them or not. But at least on Wednesday, gold failed to break above those moving averages. Moving from gold to silver now, which has been also trading within a very tight range, as you can see also on the chart. This is a daily chart, and after the drop, we've seen just some sort of like a very, very, very tight range, but it's still for the past few days, while it's holding above its solid support, which remains at $22. And this support is not just any regular support; it's been holding this support since September 2020. While we also sent out our buying signal earlier this week, which we believe that it should hold over the next few weeks. While the technical indicators actually, in the meantime, looks like at least a little bit or slightly better than the technical indicators on gold, but it will be very interesting to watch how silver will react over the next few weeks from these levels. And as always, keep your stops tight. And if you need more information about this trade, make sure that you follow us on our social media sites and our Telegram or FBS Telegram channel. Finally, I would like also to talk a little bit about our best signals that we sent out over the past few days, or at least to be exact since the beginning of this week on Monday. And those basically includes the Aussie and the Loonie or USDCAD and AUDUSD. And first of all, let's have a look at, or we will start with dollar CAD. This is when when dollar CAD was testing a major solid resistance area, and a resistance area around 128.40. In addition, the RSI also, which is my favorite daily indicator, was also through the roof. It was all over the 70s, and at the same time, crude oil also helped a lot with the quick trade that we saw, all the way down to 1.2639, yielding us or leading us to over 200 pips on this trade before the Bank of Canada decision. And as a Bank of Canada decision, which was released yesterday, and as we mentioned in our early daily report, to close these trades, or at least to book half of these profits ahead of the Bank of Canada decision. We move also to the next one, which is the Aussie or the Aussie dollar. And before that, of course, the short, as I said, on the Loonie was signal was from 1.2840 and yielding us over 200 pips as of the end of Wednesday. But as for dollar or as for the Aussie dollar, moving to the Aussie dollar, after the huge dip that we saw at the end of last week, we decided to take the risk right after the opening of the Asian session, and this is when we saw the Aussie dollar that dipped all the way down to 77 and closed the week below it. But at the same time, RSI was way below that too, and the RSI was below 20 and was way oversold, at least on the daily chart. And the pair since then bounced back all the way toward 71.83, yielding us over 180 pips until the end of the US session, at least on Wednesday, or at least until yesterday's close. But here, the reason why I'm actually showing these trades is that many of the followers, or many of the clients, or many of the observers, if I may ask, or if I may say, they always say, or often says, that I am always reluctant in issuing trading signals. That might be true, but I don't like to chase the moves. That's another thing. And as I always say, I like the setup, or when I like the setup that I know that they actually works over the years, I would jump on it, or would jump on them very, very, very early. Just like those two trades that we did, and they are the biggest example that patience works in this market, but also works better than just to post a trade just because I must, or just because I want to trade, because you can always trade every day. At the same time, there is always tomorrow. Therefore, I like to wait the trade to come to me, and not the other way around, or to chase the move just because this asset is going up, or this currency is going down. I may have to short, or I have to long. I would like to wait for the trade to come to me. When I like the setup, I would issue the trade. And as you said, as you saw, dollar CAD and the Aussie dollar, even the euro, even the British pound signals during the week were successful, but not as fast as we saw in the Aussie and also in the Loonie. Anyway, this is it for this weekly video market update. I hope that you guys enjoyed it and found it informative. I will see you also early next week with multiple live sessions on YouTube. It's going to be in Arabic and in English, in addition to the Zoom meetings that we will be doing also over the course of the next few weeks until the end of this year. And if you have any questions, of course, as always, leave them in the comments below, and I promise this time I will try to answer them as soon as possible. Thank you for watching, and I'll see you next week.